Are you interested in learning more about the NASDAQ 100 index and how to invest in it? This video will explain what the NASDAQ 100 index is, how it is calculated, and how to invest in it. The NASDAQ 100 index is a stock index that tracks the 100 largest non-financial companies listed on the NASDAQ stock exchange. It is a modified capitalization-weighted index that is calculated using the market capitalization of each company and the number of outstanding shares. It's important to note that the composition of the NASDAQ 100 can change over time as companies' market capitalizations rise and fall. The NASDAQ 100 is reviewed annually, and changes to the index may be made based on various criteria, such as market capitalization, liquidity, and sector representation. This video will explore the benefits of investing in the NASDAQ 100 index and provide tips on how to get started. Before investing in the NASDAQ 100, you should consider all the advantages and disadvantages of the index. By investing in the NASDAQ 100, you gain exposure to a large and diverse group of companies, reducing the risk of concentration in a single industry or company. Representation of technology and growth companies. The NASDAQ 100 is widely regarded as a barometer of the technology and growth sector, making it an attractive option for investors looking to gain exposure to these areas. The NASDAQ 100 includes some of the largest and most actively traded companies in the world, making it easy to buy and sell shares in the index. Investing in an index fund or ETF that tracks the NASDAQ 100 can be a cost-effective way to gain exposure to a broad cross-section of companies, as these types of investments typically have lower fees than actively managed funds. Limited exposure to other sectors. The NASDAQ 100 is focused on technology and growth companies, and does not include financials, utilities, or other sectors. As a result, investing in the NASDAQ 100 may not provide the broad diversification that some investors seek. The NASDAQ 100 is heavily weighted towards technology and internet companies, which can be subject to rapid changes in market sentiment and fluctuations in stock prices. This can lead to significant short-term volatility in the index. The NASDAQ 100, like any stock market index, is subject to market risk, meaning the value of your investment can fluctuate based on broader market conditions. Dependence on a few key companies. Despite its diversification, the NASDAQ 100 can still be heavily influenced by the performance of a few key companies, particularly those with a large weighting in the index. This means that a negative performance by one of these companies can have a significant impact on the overall performance of the NASDAQ 100. Investing in NASDAQ 100 has become increasingly popular due to its diverse portfolio of stocks and its ability to provide investors with exposure to the world's largest technology companies. The index is comprised of the top 100 non-financial stocks listed on the NASDAQ exchange, providing investors with a broad range of industry sectors and geographies. Investing in NASDAQ 100 can provide investors with a variety of benefits, including diversification, potentially higher returns, and the ability to access some of the world's most innovative companies. Additionally, the index is highly liquid, making it easy to trade in and out of positions. With its diverse portfolio and potential for higher returns, NASDAQ 100 is a great option for investors looking to diversify their portfolios. Investing in the NASDAQ 100, like any investment, carries certain risks. Some of the risks to consider include: market risk. The NASDAQ 100, like any stock market index, is subject to market risk, meaning the value of your investment can fluctuate based on broader market conditions. This can result in losses, particularly in times of market downturns. Concentration risk. Despite its diversification, the NASDAQ 100 can still be heavily influenced by the performance of a few key companies, particularly those with a large weighting in the index. This means that a negative performance by one of these companies can have a significant impact on the overall performance of the NASDAQ 100. Volatility. The NASDAQ 100 is heavily weighted towards technology and internet companies, which can be subject to rapid changes in market sentiment and fluctuations in stock prices. This can lead to significant short-term volatility in the index. Economic and geopolitical risk. Economic and geopolitical events, such as recessions, trade disputes, and political unrest, can impact the performance of the NASDAQ 100 and the companies it comprises. Company-specific risk. The performance of individual companies included in the NASDAQ 100 can be impacted by a variety of factors, such as changes in management, shifts in market demand, or shifts in the competitive landscape. It is important to consider these risks and to thoroughly research the companies you are considering investing in before making a decision. Additionally, it is important to monitor your investments regularly and to make adjustments as needed to help ensure you are staying on track to meet your investment goals. There are a few little-known tips that may help you invest in the NASDAQ 100. Consider index funds or ETFs. Investing in an index fund or ETF that tracks the NASDAQ 100 can be a cost-effective way to gain exposure to the index, as these types of investments typically have lower fees than actively managed funds. Focus on long-term growth. The NASDAQ 100 is often associated with technology and growth companies, which can be subject to significant short-term volatility. Focusing on long-term growth and avoiding the temptation to buy and sell in response to short-term fluctuations can help you better weather market ups and downs. Do your research. Thoroughly research the companies you are considering investing in before making a decision. Consider factors such as financial performance, management, industry trends, and future growth potential. Consider a dollar-cost averaging strategy. It involves investing a set amount of money into a particular investment at regular intervals, regardless of market conditions. This can help reduce the risk of investing a large sum of money into the market at an inopportune time. Stay disciplined in your investing approach and stick to your investment strategy, even in times of market volatility. Avoid making impulsive decisions based on short-term market movements. Diversify your portfolio. Diversification is key to reducing risk in your investment portfolio. Consider investing in other stock market indices, bonds, and other asset classes to help spread out your risk. It's important to remember that investing in the NASDAQ 100, like any investment, carries risk. It's essential to have a well-defined investment strategy, to consider your risk tolerance, and to consult with a financial advisor before making any investment decisions. In conclusion, the NASDAQ 100 is a stock market index that comprises 100 of the largest non-financial companies listed on the NASDAQ stock exchange. It is widely regarded as a barometer of the technology and growth sector and offers investors a way to gain exposure to a diverse range of industries and companies. Investing in the NASDAQ 100 can offer potential benefits such as diversification, representation of technology and growth companies, potential for high growth, liquidity, and low cost. However, it is important to be aware of the risks involved, including market risk, concentration risk, volatility, economic and geopolitical risk, and company-specific risk. Investing in the NASDAQ 100 can be done through index funds or ETFs, and a well-defined investment strategy, a focus on long-term growth, thorough research, and discipline are all important factors to consider. As with any investment, it is important to consult with a financial advisor and to consider your investment goals and risk tolerance before making a decision.